What is going on, everybody? Welcome aboard to GAR Capital's YouTube channel. Let's go back in time to 2023, just last year. We're going to go over all the trades together, see how we did, what we can do to improve our strategy, what improvements we're looking to do. Again, the most important thing here, guys, is you make money. All of these trades are signals directly sent to our members. Let's go ahead and take a look. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. That right there is my Instagram. Feel free to DM me any questions or just go ahead and follow us on Instagram and Twitter at GAR Capital, all one word. Let's go ahead and get started. All right, what we have here is our Excel sheet visualized showing all of our trades for the year of 2023. As you can see here, go ahead and bring this up for y'all. 75% win rate, 192 trades, 256 trades total. So again, we're going to go ahead block by block, but again, very, very important to talk about the numbers. We want to go over everything and see what we can improve on. Like I said at the top, it's very, very important to go look back at your trading journal to see how we did. And that's really the only way you can improve is through practice over time. Keep doing it over and over again. That's what we got to do, team. All right. So as you know, I'm going to keep this up for everybody regarding our win loss. So just want to go ahead and show something rather quickly on how we do things. Very, very important. Here is our Discord channel. I'm going to go ahead and expand it here. Why? Because this is extremely important. So you can see the numbers here again, 75% win loss on all of our premium signals, premium option signals. What does that mean? That means the signals that we have sent here on our Discord channel. And if you are interested in joining our free live market blog, there it is scrolling at the bottom. Here it is. This is free for everybody. The live market blog, we put on the news, 52-week highs, heat maps, all the information you need to make the right trading decisions. We also put a free watch list every weekend. So again, once you watch our options recap video, you can go ahead and get the watch list, just 3 stocks that I'm watching personally here on the Discord channel. This is the free live market blog for everybody. If you're interested, make sure to take a look at our website, gar.capital, select free plan, and then you will be having access to our Discord. And if you prefer to join our signal service, this is the premium signals. So when we send trade, like for example, filled January 12th, 225 puts at 145, we keep you updated as well throughout the day. Where do we update everyone throughout the day? This will be the watch lists and charts. This is available for premium and master class only. I'll go ahead and show you the website here in a second. And you could see every single trade. We went ahead and put out a chart explaining the reasoning for the trade. It's easy just to put things up there. But again, it's more important to help you guys understand why you do what you do. Why are you following us? Why are you doing this trade? When are we getting out? What's our target? Very, very important stuff. So every chart is here. Every trade is here. All in here for 2023, verified with screenshots, entries, timestamps, all that good stuff. So if you have some time throughout your day and you're part of the premium or masterclass, feel free to look back and backtest at your own leisure. That is our Discord server. Back to it. All right, so let's go over the numbers here. And what I did was I kind of created a baseline of a $10,000 account with a 5%, meaning $500 risk. So $500 is the risk every single trade based on this information. So again, we had 256 total premium options trades that were signaled. 192 of them hit for profit, meaning we sent it out and we got out. So we got out with a signal, like we told everyone what we did. And you could see when we close out and everything, we let you guys know. 45%, 37% on Microsoft, for example. You can close here if you want to hold, still holding. And then 50%, okay, team, you can close here and leave a runner for CPI tomorrow. We will always update you guys. You're not alone when you're trading with GAR Capital. So you can see kind of the visualization here, the growth, as you can see, of profitability. Excellent. 75% win rate. And we're going to talk about that here in a second. Risk reward isn't the best. We want to get that a little higher, and profit factor needs to be a little higher as well. December was not pretty. We had a Grinchmas, as we talked about. That's when we got that rug pull, and we had a little too much risk on the board, but we did have profits running. So average win is probably what you're staring at. Average win is 41% only on options. Yes, average loss minus 96%. That will change in 2024. What happens? Why is the average loss so heavy? Well, because we are holding contracts, seeing if anything changes. Friday is usually the expiry date for most options trades. And of course, when they actually expire, they expire worthless. But sometimes you do have to hold. Sometimes we get chopped up. So try not to feel too bad. Again, the idea is to see the growth even with the strategy. Let's go to detailed. 192 wins, $988 was the biggest win on a trade. That was a full position, meaning we told everyone to get out. Average holding day time on the winning trades, usually about a day. Interesting. 1 day hold. Now, there's something I really want to talk about here. When it comes to options trading, there is something called same day, the same day expiry trades. I don't want anyone to get confused that we do only same day expiries, like expiring on Friday. That 1 day average holding time, that's just where we get it, where with a couple days to go on the option, it just happens. That's just the average. I would say doing this is probably about 2 to 3 day hold in terms of profitability. Yes, the same day we tend to get it. Now, there's some people that can't do that because they had less than $25,000 in their account. That's PDT, right? That's the pattern day trading rule. I know that's a trading rule that is enforced by the SEC, as we know, and the CTFC. That's not something we can really change, but we can adapt our way around it. You have a couple of ways to do it. Have $25,000 in your account in stocks, fine. And the other one is to take away margin. Yes, you can trade options without margin. You need to make it a cash account. There's benefits, and then there is things that are not so beneficial. So benefits, yes, you could trade same day without any issue if you have a cash account. It's only when you have margin and less than 25,000 in the account. Now, the problem with that is that once you close, let's say you make $200 profit on a $1,000 position, that's 20% for whatever reason. Once you close, $1,200 is on hold until it clears. It has to clear, guys, to the next day. So again, if you're running a portfolio that's probably 4,000, 5,000, or what have you, that's a big amount of dry powder that you can't use for at least a day. So again, there's some downfalls and some benefits. If you have anything above 25,000, you're fine. What I usually do and what I have done is have traded with my portfolio. It has over $25,000 in it, and then I trade with that. So I don't have any PDT issues. But again, you can always do a cash account to make your life easier. But again, check your regulations with your broker just to make sure and see what works for you. That's really it's all about here at GAR Capital, finding what works for you. Let's get back to it. All right, back to the screen here. 64 losses. Average loss was about negative $585. The only reason it's not 500, like we talked about, the risk size and everything like that, was the fact that sometimes it could be just slightly over the $500 risk. Again, that's just for mathematics. So don't put too much emphasis there. But 192 wins is what I'm going to put a lot of emphasis in. And you can see in the year the day-to-day P&L. In November, we had a great month. You could see which months were not the best and which months were the best. November was great. May was pretty good. April was strong. June was pretty strong. July, September, October, and then, of course, December was ugly. So here are the P&L days, just based on the days that we close the trade, not when we open, when we close. Wednesday is one of our better days, then Tuesday, then Thursday, then Monday. Friday, of course, because that is expiry day. That's why this looks horrible. It's like saying, "My God, don't even come to work on Friday." It's because those are Friday expiries. That's why this number here, number of trades, is above. It's a little higher than everyone else because of the fact that it expires worthless when we lose. Bottom 5 trades: Caterpillar, Spy, Disney, Meta, and Tesla. Tesla has lost for us before. It happens, and you could see these are the worst ones. Some of the better ones: Tesla was the best trade of the year in terms of a full position back in November 14th with DraftKings. Tesla again, Spy, and Tesla. Tesla was one of our better ones this year. Take a look at this, guys. These are the top 5 stocks we traded in 2023. AMD, 21 out of 23 correct. That's great. 91%. QQQ, 91% as well, 10 out of 12. Tesla, 21 out of 24, 87%. Palantir, 12 out of 14 trades sent were hit, 86%. With Mara, we took advantage of that Bitcoin run 10 out of 12 times. We caught it for 83% win loss. That is excellent work. You can also see the P&L based on the date, usually around 9:30 in the morning. We close right in the morning, first thing, 11 a.m., and then 1 p.m. being the most profitable hours, let's just say. Number of trades, The most is right around 10 a.m., some around 3 p.m., some around right at the open, right around 9:30 to the 10 o'clock hour. So it just really depends on market conditions. Can't really just base ourselves at, oh, we're only going to trade at 10 a.m. It doesn't work like that. Let's go to the calendar. Now, this one is kind of interesting. Kind of looks like a flight calendar, right? These are the days or the best days to travel or not. But you could see it here in January. You could see the weeks: $126, $182, minus 612, plus 914. Nice gain on that based on the $500 risk. That's profitability. $29 was in fees. That's considered 150 one way. So again, $3 round trip. We'll call it that. February did very, very well. You can see all weeks were green. A couple of lost trades there, three of them. But again, a solid month, up 2,220, 273. March was rather flat, as you can see. Friday was a pretty ugly day on the 10th of March, but we did boil the next 2 weeks. And then, of course, that Friday afterwards wasn't the best. Ended the month flat, but it's still a strong week, a strong quarter. Just to get the number here for the quarter, see if I can get this rather quickly for y'all. In Q1, we were 48 out of 62 with a 77% win loss. So again, you can see here on the weekly kind of calendar look chart here, this is the days that we've done well. You can see the consistency. Yes, the red marks are few and far between. Yes, but the idea is the consistency. That's what we're looking for. Some of the names that stood out to me were, for example, Disney on Friday, the January 20th. We went ahead and filled those January 27, 105 calls. The runner hit 300% in the money, even though we got 40%. So the losing trades are few and far between. Only 4 losers in January. We had about 5 in February. March was a pretty tough one. That was about 11 in March. So just in the month of March, we were 19 out of 26 in that month. That's 73%, pretty much flat because of the commissions. In February, that was pretty solid. Again, you had 15 out of 17 for the win loss. That was 88%. 2,170 is the number that I have here, not counting the fees and stuff like that. Really, the only losing trade that stood out to me, really, that was just a crappy trade, was Russell. We had the 200 calls for February 10th. We filled those on February 3rd, and that ended up worthless. We had an Apple trade on February 24th, the 160s. That gapped down on some headlines from the New York Post. That was a tough one, and that brought us down. That was on 221. So again, if we want to get a little more details on these trades, here it is. I have my other master spreadsheet here, and you could see how January is running. Apple we didn't start off right in January. We had a nice streak going of about 5, and then Alibaba, Boeing, and JP Morgan kind of put that away. We closed the option at least a little early on Alibaba ahead of a CPI number that we had. We also did a QQQ hedge. If we didn't have this hedge, this was it right here, the 285 puts in February, we actually would have been 79% for the month. So I really wanted to emphasize that QQQ hedge. That's what I wanted to do. That was a call that I made. It didn't work out. Fortunately, we also got some other trades after that. Back in March, we were running, where was this? This is the January one. Yeah, right at that point, we had about 6. We were running about an 8-win streak of trading, including Apple, NASDAQ, Apple again, Disney, Tesla, SPY, Microsoft, and Amazon. And what you're noticing here, guys, on these actual spreadsheets and all these trades is that, let's go ahead and go here for a second. The most important thing here I want to emphasize, look at the names that we trade. Netflix, the Russell, Amazon, Boeing, Disney, Tesla, Microsoft, SPY, Apple. Those names, again, it's important to find options that have volume. Why is volume important? Because we want to buy something that we could sell as quick as we can. It's very, very important that we find that. We're not investing in these names. We are just trading paper. That's all we're doing, guys. We're just trading paper every single day, day in, day out. We're trying to find the lowest possible price to buy and the highest possible price to sell. You're doing that pretty much, how many times? 192 times a year. Not easy, obviously, but if you focus on the mega cap names, that's going to help you. Don't focus on penny stocks or small cap names or biopharma. Again, don't worry about those. And again, sometimes we have the high betas. True. I'll give you that. But for the most part, it's still the kind of the same names, the Teslas, the Qs, the Amazons, the Microsofts. Those are the names that you should focus on because they tend to have volume. And again, those mega cap names are not as volatile as we would say a biotech stock that's looking for patent approval on a drug or something. A lot of people like to trade that way. That's not what we do here. Again, we're not looking, if you notice this, let's go ahead and use this here, this calendar. Let's go ahead and use a sports analogy. Let's say this is the baseball schedule for your favorite team. And the green squares are the winning games. If we looked at just the Q1, January, February, March, I would confidently say that team's in first place. That's pretty consistent. And that's what we're trying to focus on. Consistency over time always yields results. So a strong Q1 got us around 77.4% on a win-loss, 48 out of 62 trades. And again, just want to go ahead and reiterate the win-loss for the year. Very, very strong all across the board on Q1. Let's go to Q2 starting in April. All right, we're going to Q2 here, and you can see in April, we did start off rather strong. A couple of losers here and there in the beginning, the Russell, Tesla, and an Apple trade. But we did have a nice 6-win streak and 7 out of 8 winning trades. We also got into some other names. DraftKings started peaking out as well. Here's Q1, 45 out of 60, 75%. Very consistent with the year to date that we've been doing. Remember, look at the scrolling here at the bottom here of your screen. Look at the names that we've been trading. Marin, Palantir, granted, are high betas, but the other names, those are big mega cap names. Again, focus on those. Google's, the Metas, the Alphabets, the AMDs, the Teslas. What else we got here? The Googles, what else do I have? Another Caterpillar's another good one. So as you could see in the terms of Q2, we did very well, 75%. Going on to here, April, rather solid. Let me go ahead and give those numbers for April 2023. April 2023, we were 14 out of 17 with an 82% hit rate. We did hit profitability in April. You can see the trades here, 3 profitable weeks. Just the first week wasn't so strong because we had Russell 2000 and Tesla did not hit. Moving on into May, 16 out of 20, 80%. Got 4 losses here, as we can see. Here was April. And again, not tons. I'm using 2 spreadsheets so we can really emphasize the point of the consistency. And again, only 3 losers in April. That's what we're trying to do, guys. We're trying to minimize any kind of loss. We don't want to keep hitting things just to keep hitting them. In May, 16 out of 20. Here you go. 4 losers, 16 winners. Apple FOMC morning was plus 2%. Pre-FOMC got to 174.20 on expiry. We had the 175 calls. That was a loss. But we did DraftKings again. Earnings report move, early morning volatility, deep in the money, 188%. One of our best trades of the year happened in that day, May 1st, May 1st, excuse me, was at the day field. May 1st, the expiry was the May 5th, 22.5 calls. Granted, look where we are now in the stock, a lot higher than 22.5. DraftKings, we also hit again. We were hitting actually a nice little run here, about 7 in a row, and then we also had another 6 in a row. So that consistency over time, as long as we get above 75%, right? That's kind of what we're looking for. All right, so we go ahead and move to May. Let's go to June, sorry. Going to June, 65%, not as good. This one was tough, and let's go over the names here. Disney did not work out for us, the 85 puts. We were trying to short it, and we actually had longer-term expiry on that, about 2 weeks. Facebook didn't work as well. That it hit as high as 35%. Now, we really want to focus on that. We don't want those turnarounds anymore. That's one of those. If we would have just closed, I put this number here, very, very important. If we would have closed any of these trades in the month of June above 20%, we would have been 22 out of 23. That was 7 stocks that, again, just because of the flip, that hurt us. So you see, hit 30% and fell, Nike, hit in the money and reversed, hit in the money 4 times, has high as 20%. Amazon, the 130 calls. Facebook got as high as 25% on 623. How about DraftKings? The 27 calls got as high as 30%. Now, we did have a really great trade. One of the best ones of the year was Tesla 220 calls, and May 31st hit as high as 1,263. Some of these runners are absolutely amazing. And again, runners are just leaving a contract while closing the bulk of your position and letting that contract run. See how much more you can get. So let the runners help you, but none of these numbers include runners. So you can see June not the best, May was strong. But what could we have done in June, guys? What could we have changed? That's really what we want to know. What could we have changed in terms of kind of watching out for those kind of reversals? So we actually have an example, and I want to show you guys how much we're trying to improve, not just me, but all of us together, because we're doing this together, right? This is kind of your trading journal. So what can we do specifically in the future to prevent those kind of reversals? Now, again, guys, the numbers are there. If we would have just closed at 20% profit, we'd be 22 out of 23 that month. Let's look at it. All right, we're gonna go to premium signals just to show you guys how we kind of changed things here and there. Okay, let's see it. We had UAL calls, February 16th, 45 calls. This is the 8th of this year, January. So we were looking pretty good. We got some gains, AMD, Apple, everyone's feeling great. So with UAL, if you notice, right at 1:33 p.m., I said, take 23% and leave a runner. And the reason I said that is a possible double top on the 1 hour daily. Yes, we have time on our side, but let's take what we can and let the runners do our thing. Details, I'll watch this in charts. Let's click on it together. Here we go. UAL, I went on the radio, and again, this is available for premium and masterclass members. UAL, we spoke about this one on the radio and Instagram story. Feb 16, 45 calls have unusual volume with 13,000. We will use 4181 as our pivot support, the 100 DMA, and target the 200 DMA at 45.47. I want you to look at this chart extremely closely. Why is this important? We have our target, but the market doesn't give a damn about our targets. 44. Keep an eye on this number right there. Okay, that's important. UAL, green market, pre-market, we're looking good, right? Everything's great. Nothing's going to happen to us, Carlos. We're looking great. UAL, green on the day, but slow rolling. We're up 22%. This is what I sent to everybody at 1:32 p.m. UAL, United Airlines. I'm watching closely. The last thing we want is a double top on the pullback, and we're up 23%. I do not like this 1 hour candle here. I think we pull back after a solid move of UAL. There's not much volume on our contracts today, even with a 2% move. Not ideal. You see this chart here? 43.71. I want you to keep that in mind. 43.71. Possible double top on the 1 hour. Here you go. Let's go to Thinkorswim. Take a look at what happened after that double top. Let's go to the 4 hour. Did we break above it? Yes. But look what happened after. What would have happened if we didn't take that 20%? It would be June of 2023 again. This is why we record stuff. This is why we do videos. This is why we trade, so we can learn together. That's the key. Instead of having these kind of reversals of 22 out of 23, this is not acceptable. Not at all. But what is this. Letting everyone know, hey, we're okay with 20%, and then we got that collapse. Fine, I'll live with that. But 23% in a runner is way better than minus 100% or minus 80%, and we're hoping and wishing that things will change. Maybe it does, maybe it doesn't. But I'm not going to allow you guys to spend money and capital waiting for the best. Back to it. Let's go and take a look at July. July was a great month. We're still in Q2. 21 trade win streak in July. One of the best months other than February. 21 trade streak in a row. You see all that green there? That was awesome. I wish I could replay July over and over. Look at the names that worked for us: DraftKings, JPM, Metaverse, Shopify, Amazon, PayPal, AMD, Caterpillar, Palantir, Apple, Goldman Sachs twice, Chevron, JPM, JP Morgan. We also did Square and Meta. This was a testament to being prepared. We knew what we were looking for. 21 trade streak. I mean, not much more you can say. Was an exceptional month to wrap up a really great quarter. And that quarter for Q2, excuse me, April to June, we got 45 to 60. July, we're in Q3. Excuse me. So Q3 now. So we know July started off us with a bang. What happened in August? August, rather flat. September, not so good. Let's get to it. Back to July. Again, we know the 21 trade win streak. Killer. We go to August. This was moved by mistake. And here we go. August, not so good. 15 out of 22. What could we have done better? So the Russell IWM on July 31st, August 4th expiring calls, there was a reversal due to a Fitch downgrade. Nothing we could do there, guys. That's all it is. 3 trades were reversals on headlines. If our target were hit, mind you, without headlines and reversals, we'd be at 79% win-loss this month, that month of August. 15 out of 19. 3 trades were reversal on headlines. $500 loss. That's $1,500. We'd be at 810 profit gain without those 3 reversals. Let's look at it. Amazon, 137 calls, hit in the money on August 23rd after hours and then reversed at the bell. Headline hit on Boeing, 823, stock reversed. How about ExxonMobil? Reversal after a breakout. Just tough all around. The reversal on the Fitch downgrade. It's just after hours reversals where we have no control. That's all. But some nice gainers here. Tesla bailing us out again, 204% on a runner in the money. How about Netflix, 200% in the money? How about Tesla? Again, 344% in the money. This was the Tesla month. 1, 2, 3, 4, 5, 6 Tesla trades for the month of August. If we didn't have Tesla, we wouldn't be as good. It would have been a lot worse, let's just say. So that was August. Let's go ahead and move on to September. In September, we didn't have much trades, which was interesting, but a tough one. Red month in the month of September. It's just terrible that July was so strong. We started off so strong. It would have been better for us just to stay home, not do anything in the month of September. But here it is. September, here are the losers. Hit in the money, reverse break even on Thursday for Microsoft. Reversal at 93.83. We had 94 calls before break even on that Thursday. Apple, green on Wednesday, then open reversed. Gave option to close the day before expiry on small caps, minus 10%. So again, I'm just going to eat that. But again, I told everyone if they wanted a chance to get out, that's the time. JP Morgan in the money, hit as high as 20% and reversed. So we were probably going to be 9 out of 12. Only 3 ugly ones gave everyone the 10%. We could have got 20% on JPM. Just tough all around on that month. But, heads held up high. As Q3, we were a 73% win loss again, rather consistent. It's a gain of about $123. Not much. October. Now we come around because October and November were absolutely solid. And again, you can see the consistency here. November being one of the best ones that we've had. Sticking to it. October. Let's look at it. 17 trades, 12 out of 17, 71%. Got as high as 32% on Microsoft, reversed. At as high as 20% and reversed. But Google was one that I really want to emphasize. Now, I really want to talk about this Google trade. August 6th, I'm going to put you back in a couple months ago. August 4th, we filled this trade. August 6th, expiry for Google, 137 calls. And I was getting all the questions. Should we hold? It was down. It was down 77%, ahead of non-farm payroll. And of course, I didn't want everyone to feel bad about just holding again. And what happened that day was absolutely insane. It went from negative 82% at the lows to 124% profit on expiry day. Let's go back to it. Google, we're going to go back to October. Let's go and bring up the daily. October. You can see that October push higher was on the 10th. What was the day? Let me make sure I have the day. The day was October 6th. 6 right here. Here's your green candle from 134.95 all the way to 139.14. In one day, that stock jumped up from 135, 134 to 138. About a $4 to $5 move just on Google in one day. That was non-farm payroll. Unbelievable that it happened, but it did. And that is something we just have to live with. So, I mean, what can change? What do we need to change? Really, again, like that example with UAL team, it's kind of just being patient and going through it throughout the day and making those decisions. But we can get better. IWM, another one that kills me, the September 28th, October 6th, 180 calls hit as high as 30% and flipped to red. That is 3 trades in the month of October that if we would just close at 20%, we'd be at 15 out of 17. Shoot, we'd be 16 out of 17 if we would have held Google. The only one that didn't work was NVIDIA 470 calls for October 6th. Bad luck. Fine, call whatever you want. Reversals happen. We just have to get better. November was great. 17 trade winning streak. You could see it. Marathon, Mara, and Palantir being the only red ones. Very rare that they were red. But again, 17 trade winning streak. Not much I can say on November. November was absolutely beautiful. I'm very proud of the team there. And then we go to December. December, Grinchmas. Wednesday's drop before Christmas killed all of our premiums. That was 5 losing trades. And again, that's what happened to skew that numbers on a year-to-date basis, as we have shown. That's one that's going to haunt me for a minute. And that was December right there. There you go. That's top to bottom what we got. Let's go to detailed charts and really deep dive here. Vertical charts, performance by day of week, Monday, Tuesday, Wednesday, Thursday, Friday. You can see Friday again, that's skewed. Performance by price range. These are the price of each option. A lot of people ask me, what's the price of the option that you usually do? What's the kind of the process that we usually look for? Do we do expensive? Do we do anything in terms of, same day expiry being like a couple of pennies? What we usually do is right around the $1 to $5 range in terms of options. That's kind of what we're looking for premium. Less than $1 has happened before, but $1 to $5 range. We try to keep it at least available for everyone who doesn't have a huge portfolio. We got to be at least somewhat fair. These are the bottom 5 symbols in P&L. The ones that didn't do well for us. Not the best, obviously. We talked about which one's the best ones. Top stocks we've traded. I went ahead and showed at the bottom here as well. The Teslas, the Palantirs, yes. But here's the ones that didn't do so well. ExxonMobil, SPY, Apple. I know, Apple of all companies. Disney and IWM. These are the ones that have lost us the most money. Here's the ones that have gained us the most money. Tesla, AMD, Palantir, DraftKings, and Google. How about that? Now, Mara's not up there because we did have a loss on Mara in December, I believe. But again, you could see the P&L there. It's important to break these down. In terms of number of trades, what stocks do we trade in terms of how frequency? Tesla, nearly 25 trades. AMD, Palantir, DraftKings, Google. There you go. Kind of sticking with those names. They work for us. We do love our Tesla trades, that's for sure. All right, winning, losing streak. Max winning, current winning, max losing. Now, again, my number is a little different. Why? For the fact that this goes by closing. I go by opening. Big difference. So again, these numbers are a little different. We had a 21 trade winning streak and a 17 this year. Distribution of gains and losses. You could see max losing of 100%, as we know, when they expire. And you can see the percentage gains right around that 36 to around 48%, that 40% rule that we've talked about. That's what we use. 40%, leave a runner. Every trade is different, but that's what we look for. And you see the last 50 trades that we've done. Pretty consistent, I would say. One big trade here, but again, for the most part, little bites, couple losers here and there sprinkled. But the idea is consistency over time. And we have this over there as well. The 192 winning trades, 988 in terms of our biggest win. Average holding time 1, 64 losers, biggest loss of 565. I believe that was Caterpillar. So, that's a lot of information. I know. But for everyone that is watching this out there, this is what we do. This was our year of 2023. We looked at the things that we could have improved on. You know, locking in gains is going to be so important in 2024. We showed the example already with UAL, getting out of that trade and locking in some gains. I'm going to work way more diligently, guys, to help you navigate this, whether it's through the radio on our Discord. Watch Us in Charge is going to be a lot more updated. I'm going to get you some extra details as we go along. I actually want to show that to you right now. So I want to kind of give you guys a peek into 2024 because I didn't track this in 2023. Let's take a look at this rather quickly. Watch Us in Charts here in our Discord. And here's some details I put up here. This is just in 2024. So now we know about 2023 and how we did, right? We know some of the missed opportunities and money we left on the table. We weren't perfect, but we can improve. So here's a couple of things. 2024, 7 trades made, 7 profitable, 100%. That's where we are for the month of January 2024. 5 out of 7 of these trades hit in the money, meaning that the stock itself is above, if it's calls, or below the contract strike price, whether it's for puts or calls. 2 biggest gainers, Microsoft, 385 calls, hit 200% at its peak in the money, and AMD hit 220% in the money on the January 12th, 145 calls. Our busiest trading days so far in 2024, these are stocks that have been opened, options trades that have been opened these days. 3 trades open on each of these days, Monday and Tuesday. Here's the max drawdown data. Now, this is a question I've gotten a couple times from our members is that usually if we get a drawdown of around 70% or 80%, how often does it come back? And remember, I talked about that Google trade, right? How that flipped on that NFP day. Pfizer, we had those 30 calls for January 19. It only got as low as negative 5%, hit as high as 70%. Citibank, January 19, 55 calls. Negative 20% was the biggest drawdown, hit as high as 75%. DraftKings, minus 19%. I still have that open, by the way, but that's the biggest drawdown. Those are for March. Tesla 225 puts, that hit minus 64%, but it hit as high as 106% in the money. And boy, I had to convince everybody that we were still in the right path. Not easy, I know, guys, I know. But guys, you have to trust that process. It's a very delicate balance. It's not as simple as, well, minus 50% in close, because sometimes these stocks get choppy. There's not a lot of movement. It just happens that way. So stick to the analysis, but be ready for any kind of change is the best advice I can give everybody. Amazon, January 19th, 160 calls, which are currently open, are down 63%. Guess what questions I've been getting lately? Are we still holding? Is it going to be okay? Yes, it's going to be okay. Yes, it will. AMD, January 12th, 145 calls. UAL, 45 calls. Microsoft, January 19th, 385 calls. Opened green and stayed green. Continued green without going red, my favorite. And we closed them profitable. AMD, Microsoft hitting the money. So those are our drawdown data for this year so far. I'm going to really record this, every single one. I want to make sure what are the probabilities in our statistics that gives us an opportunity when the stock is down due to any kind of chop, or stock is up if we're in puts. What is causing it? The notes, and how far low do we go? And what does it take for us to come back? How long does patience matter before it just becomes hopium, where we're just hoping for something to happen? That's not what we want. So that's why I did that data point there. So one more piece of data point is the masterclass trades. Masterclass members, yes, they do get extra trades. I know, not fair, but these are higher risk trades, higher risk. So it's an extra set of trades here. And you can see 74.4%, 32 out of 43. A couple of losers towards the tail end of the year on TLT. Didn't move. It did hit in the money. Got minus 65%. Roku and Caterpillar wasn't in the money. Hit fully expired, worthless. But some great trading here all across the board, and a vast array of names. Look at the names that were traded here on Masterclass that we don't trade on Premium Signals. CCJ, Ford, Shopify, Rivian, which was a loss. Coinbase, which was a win. TLT, which was a loss. EEM, which was a win. And what else is another one? Deutsche Bank. Oh, God. That was a put during the throes of the financial economic issue with the Silicon Valley Bank, and boy, were we close. We actually got in the money, team, on that trade. The target was hit. We just ran out of time. So these trades are extra for our masterclass members. We post it on the Discord server as well. Only masterclass gets access to these trades. So they're all here. Me and Nick post those together throughout whenever we see something that we like, let's just say. So if we add it up all together, we're still right around that 75% level. 32 out of 43, add 32 to the wins that you've had. Not bad. Not bad at all. I mean, again, I look at this with a lot of nostalgia because it was only a couple of months away, a month away. But the fact that, we did so well, but yet, how do I say this? We did so well, guys, but I know that we can do so much better, and makes me so excited for 2024 moving forward, because now we've learned just in 2023 all we needed to know in the market in terms of what we are looking for. Again, that hasn't changed over years. The momentum, right? We're finding that. I think the thing that we need to work on the most, and a lot of people have been happy that we've been doing it, is when to get out, right? I think everyone knows how to read a chart, but it's that execution of when to get out, when is the best price to get out. You're never going to get perfect, right? That's why we have the runner strategy. And I think a lot of members do appreciate that. The runners are not included in this calculation here. Understand that. So again, you use runners at your own benefit, at your own leisure. You don't have to. You don't have to close when we have to. Hell, you don't have to get into anything when we say anything. That's really up to you. So if anything, this should be a testament, if you're a member, to your great work, not ours. Because you know what? It takes your choice to click that button. It's your decision to join. It's your decision to listen. It's your decision to read and to research and to, manage risk. So all of this, you should be proud of yourself if you've been following GAR Capital, because again, guys, this is all about helping you. At the end of the day, all we're doing is pointing to you in the lake of where the fish are biting. Whether you fish there or not is completely up to you. Here at GAR Capital, we want to give you the power to turn the stock market really into an ATM, not a slot machine. An ATM where you get your money, you pull it out, and then you're done, you walk away, move on. You're not staying there hoping for the best, keep gambling and keep pressing buttons. That's not what we want. Have a number in your mind every week of what you want to accomplish. Hit that number and you're done. Leave it that way. Break down your goals step by step. That's how it's going to work out for you over time. I've been doing this nearly 10 years. It's going to be in October. 10 years of GAR Capital. I can't believe it. And I can honestly say, I have never been this confident for the future ever in my career. I'm excited to do this every day with you guys. This is why I do the videos. This is why we do the blog. This is why we do all of this. So important. So important to research, so important to record, write it down. You need to write everything down. How will you know where you're going if you don't know where you've been? See the improvement over time. You can see the line graph here in profitability. Yes, you have some drawdowns here and there, guys. This is not easy, but it's not supposed to be. You can either get sharper, you can get sloppier. At GAR Capital, we will make sure that you get better every single day. So with that being said, I mean, looking at all this data, 12 months of work, all in one video, all I can say is great work. Keep going. Keep going, keep pushing, and we're just going to get better. The goals of 2024 are as follows. Personally, I want to get 85% win-loss this year. 85%. I want a perfect month. One of these months, I want a perfect 100% month. Boy, have we been close. I think we get there. 100% month, and then we take a step to 100% quarter. Oh, we can do it, guys. I know it seems like a lofty goal, but man, we can do it, and we can do it together. So thank you guys, everybody, for joining me today. If you are interested in joining our service, here it is. It is www.gar.capital. Here is the website. And again, guys, if you want to join our free live market blog, you got to go ahead and get to access our Discord. Scroll down, and that's it. Free plan. And if you are interested in joining any of our services, we have quarterly membership, we have annual plan for the year for premium, and we have premium per month. There's not not one size fits all. This isn't, doesn't work that way. People are very tailored to different things. Master classes for those who want a little more. They want more of a coach. They want someone to slap that cupcake out of their hand and make sure that they're working out, meaning the stock market, make sure they're doing their research, recording, and everything. If you're somebody that needs that one-on-one attention, that's what masterclass is all about, team. It's all about it, right? That's what masterclass is. It is one-on-one teaching in comparison to, let me go ahead and show you the actual pricing. We go ahead and get to GAR Capital, www.gar.capital. You go to access our Discord. If you want the free plan, again, for our Discord is right here. Get free plan. And again, if you want to join our Signals service, we have the premium membership, we have the quarterly membership, we have an annual membership as well. And we also have masterclass for everybody here. Again, that's for the one-on-one. Love to have you on board, guys. This was a great video. I'm glad to have done it. And I'm glad that you guys have joined me. Again, I'm going to scroll to the bottom, all of our details. Have a great rest of your day. Thank you for joining me again. My name is Carlos Garcia. We just went through 2023 together. Let's kill 2024. Have a great rest of your weekend. I will see you guys on YouTube for the next morning note. Pardon me. And I'll see you then. Cheers.